Hello, everybody. My name is Stephen Choi. Welcome to Trading with Livevol. This is where I trade my real Reg T account, and then using LVX, and you guys can see how I use the software, as well as see what I do in terms of trading. I want to kind of start off. Let's actually just go to my accounts. It'll be easier. So I'm having a pretty bad day, but it's almost like I did it by myself, right? It's like a self-imposed. So over the weekend, I was reading all this stuff about Ukraine, and basically, I think what happened was that I was too long the market in terms of versus my total equity. So this morning I decided to get up because I thought there was going to be this huge sell-off, but basically it was a whipsaw, and I sold at the bottom. So it kind of sucks, but just in terms of the, like an intermediate, longer-term perspective, I just didn't want to be as long anymore, even though I think the market without Ukraine is going to go up a lot. So in the end, it might not matter. Well, let me actually go to this one. So you see how this happened. I sold down here. Basically, this, if it stays above here, it has probably a pretty good chance of going to 1900. But I just couldn't. Basically, I was betting too much for my account, and I think one of the things is on Friday, I would have probably taken some of this off if I was actually paying attention to it the whole time, but I wasn't. So I think going forward, I just need to maybe do something that are a little longer term. I don't have to babysit all day. I guess it's something that, you guys who have a retail account and have jobs and have other responsibilities other than devoting the whole 6.5 hours to trading, basically has to adjust to. So I'm kind of having to do the same. I was just looking at trades all day and trading, and now I think maybe I might have to do something a little longer term, right? So the reason I say that is because it seems like the longer term trades that I put on are working out better for me. So like you see in Apple, I put this on in March. For May, I have this trade on, this put spread that I put on way back for July. It's also in March. So I think maybe going forward, I might do that. I like the B of A trades. That's in January. So maybe that's the kind of forward-looking that I have to do. One of the things that I was kind of thinking of not wanting to do is kind of like waiting until the next day to have the market go a certain direction for me to make money. Whereas before that was okay to do, but maybe I have to reconsider that a little. Not that I can't do it, but maybe just do it if I know I can pay attention versus just putting it on and not paying any attention whatsoever. But so basically what I did was, just so you guys know, I got out of my SPY calls, which is my biggest loser today. So you see how I got out of these because I couldn't take it. And then I got out of almost all of Facebook except for the fact that I'm still bullish, so I have this spread on. So I like this spread, the longer term spread, and I'm going to sell the 65 calls in every month going forward, and I got rid of this put spread and this call. So it's pretty contained now, and I know exactly what my risk is. It's 430 pretty much times 4, right? So about $1,700-1,700. The other one that I got out of is Micron. So I had a pretty good run in Micron. But I got out of these today, pretty much more than double my money on that one, so I'm pretty happy. But it was pretty much time to move on. And then I had some Yum calls that I got out of. because I don't think they're not really doing anything. They're just sitting there. So I just got out of them. So nothing big, but I just cleaned it up a little. So I'm a lot cleaner. I do still have some longs from like the trade a minute guys, but I'm just gonna let them do what they're gonna do, and I'm just gonna keep trading, right? So the biggest thing is if I had a bigger account, I probably wouldn't have been shook out to this morning's trading, but because my account wasn't as big, I had to get out because I had to make sure that I would trade another day, right? I can't like lose $10,000 and basically have nothing in my account. So sometimes your account balance dictates how you have to act. So, you know, if my account was bigger, I probably wouldn't have gone out, but since it is, I got out. I happened to go out at the low, which kind of sucks, but it is what it is, right? But I did see some other trading today that I wanted to let you guys aware of. Now, I'm not sure if I'm going to do these trades, but I thought it was interesting. So as you guys know, I have this watch list trades. It has all the trades, 1,000 contracts or more, and it basically scrolls it here. So I just keep an attention. At the end of the day, I kind of look through it to see what traded. Twitter came on that list, and it was basically doing this put spread, right? So you can see how it's a little weird because it's not exact. It's 1,084 by 813, and it looks like you know, you're buying the 41.5 puts and selling the 48 puts, right? Let's see. Let me actually see if I can put it to 41.5 puts. So the weird thing is it's all in May, right? So they're going to do the 48 puts, and looks like they were, let's see, they bought 813 of the 48 puts, and then they sold 1,080, or they bought 1,084 of the 41.5 puts. And then they did that 813 times for 330. Right, so let's actually go to, and that's May 09 48. So let's actually go to May 09 48, which is this week. So they sold these puts 1,084 times, and then they bought, actually, 48 puts, right? Bear with me. Okay, so they sold these 1,084 times, and then they bought 41 put 832 times. Right, so I kind of, you can punch it in, so you can see this is the position. Let's see the risk chart to how that looks like. So looks like basically if I get rid of these, and you know, he's saying that he doesn't think it's going to go higher than basically 48 bucks, right? And this is where he probably wants to play. He doesn't really believe that Twitter is going to go down too much, right? Oh, because he owns. Wait a minute, hold on. Oh, actually, I think he bought more than he sold. Sorry about that. 1,084 minus 832, right? 813, sorry. Alright, so let's look at that risk chart again. Right, so basically this makes no more sense. So he doesn't think that Twitter is going to be in this range. So basically, if Twitter goes up a little, that's where his maximum pain is. He's going to lose $88,000. And it has to go above 43 for him to start making money. But this is at expiration, right? So right now he can actually have it just needs to move a lot for Twitter for him to make money now. But every day that goes by, he has some decay because it's basically a straddle that he owns, a ratio spread. And when you put it up, this is kind of what he's saying, right? So if you look at the Twitter chart here, he's basically saying it's going to move out of this range this week, and that's what he's betting on, right? So this guy is putting a large bet down because he's going to lose quite a bit if Twitter doesn't move, but he tends to do well if Twitter moves a lot. So if it starts going below $38, he'll start doing okay, and if it starts going above 43. So to me, it seems like he's almost betting more on the downside than the upside. So, you know, we can kind of follow it. I have it in there now. He did this trade. I think it's a pretty good trade, but who knows? This morning looked like it was, it didn't really move that much, right? This is the last 5 days, and this was after earnings, if you look at it. So that's what he's betting on, is that it's going to move this week. That Twitter is going to move this week up or down, as long as it's not stagnant here. So it has to be above like 43 or below like 38. So he actually did an in-the-money ratio spread, and basically he's betting on a move, right? But we'll see what happens. Right now, I don't know if he's up. So he bought more of these 320. Yeah, so he bought those, lost 20 cents. He sold those, and those are now. Yeah, so he's down a little bit, but you know, that's his bet. The other one was XLB. So just so for you guys who are watching this, the cool thing is you can actually just type in whatever the volume. You can print, you know, you can click on the risk chart, and there you go, right? It's one of the things that you can use just to see how you would do doing this spread, right? So, you know, you need it to go above 43, probably below 38 is where the stock will have to go for this trade to make any kind of profit, and that's the bet that he's putting on, right? You just type it in here on the Sims, you click on risk, and then you see that chart. So any trade that comes up, if you don't quite understand it, you can just type it in on this Sims, and you can duplicate that trade, right? You can even put in the stock amount as well if they did it with stock, right? So let me actually do the next one. XLB. So there's a trade here that came up. 5,000 of these puts, and they're basically buying the June 46 puts. For those of you guys who don't know what the XLB is, it's a ETF, and they basically deal with material sector, right? Such as chemicals, metals, mining, paper, forest products, containers, packages, construction materials, etc. Right? So they're saying that it's going to go down. If I look at this chart, it doesn't really look that bearish, but they're buying a lot of these puts, which is, let me actually, they're buying these puts, right? Now, there is 9,000 open interest here, but yesterday they did some, and looks like they're opening. You see how like they did about 2,000, and the open interest increased by 2,000. So you can kind of see what they did it yesterday for. So like these bars, you can just click on it, and they'll tell you what they did. Yeah, they paid 53 cents 2,000 times, and today they're buying more for 57 cents. So whatever it is, they're not, you know, if they're buying stock, it's one thing. Maybe they're buying some protection. It's not as clear with the indexes. It's a little trickier because people could be basically hedging their portfolio. So it's not necessarily that they want it to go down, but you can see that people are buying these. And now you can buy it for 50 if you want, but that's what they're doing. So another stock that was that caught my interest was McKesson. So if you see McKesson, they did this large trade where they sold the call spread, right? Jan 50.80. So you know how I tell you guys that I like selling spreads where or buying call spreads where if it stays the same, if it goes the way I think, I make money. Well, it's the same thing with this McKesson. So this guy is selling a $30 call spread. Most he can lose is, you know, 30 minus whatever he received. So right now this looks like what, like $8 or $15.30. So basically he received $15.30. So that's most he can make. He can lose $14.30 if it goes above 180. The thing is, this stock, McKesson, is trading $7 below the break even for him, right? So it's if it stays here or goes up less than $7, he should make money. If it goes down to 150, he's gonna make 100% or over 100%. And this is the chart, right? So he's basically saying in January he's doing that. McKesson is going to kind of hang out here or lower. I don't really know that much fundamental about McKesson, but generally in terms of the trade, I like this trade because it's a trade where you're breaking even or making money depending on. So let's see, it's selling 1350 and buying 1350 of the 180s, right? So let's actually go to that thing. So I'm doing this because people were asking like how I use this risk chart, and so looks like it did 1505. So let's actually do 1505. Now, one thing of note that you guys should be aware of is that this could be opening or closing, right? So even if I like this trade, I would probably have to wait just to see if the open interest is increasing or decreasing, and it might actually be decreasing, right? So if it's decreasing, it's closing, which makes the whole trade kind of like a non-release starter because he doesn't believe that. That's why you would close. You wouldn't actually open it. So you have to wait until tomorrow to make sure that that it comes in, right? So so basically, this is his spread. He basically has a put spread on, right? For the next 8 months. Maybe I can. All right. So it's basically a put spread that he has on, and this is how his break even is going to be, depending on where the stock is, right? So it's basically a put spread. his break even is 75.30, 65.30. Oh, okay. Right. So if it stays here, it's not that good. So, you know, I recant that. It's not that great of a trade anyway. I actually thought this was trading 58 bucks instead of 168. So it's, to me, like, I can see why he might close. Yeah, but definitely not what I expected, right? So those were it. So Twitter, it's almost like a ratio spread. He's expecting it to move quite a bit. Then there is the XLV, where they're buying the 46 puts. But we will probably have to see until tomorrow. And then this McKesson that I looked at just now, and it's not really that great because it's actually already in the money. So he's losing putting on this trade. So I don't think it's that great of a trade. So I recant what I said earlier when I actually did this. So I have, in wrap up, I'm going to have an earnings report today just in about 10-15 minutes. There isn't that much going on in earnings, so it's kind of quieting down. So if earnings dies down after the earnings season, maybe I'll put something else up, maybe some high order flow, but we'll see how it goes. Right now, just to recap, I got kind of spooked because I was reading about Ukraine, and I got out of my calls, even though you know, I talk about many times how I look at the long-term chart of the SPX, and right now nothing's really changed, right? But I did go back here to, and I want to show you guys this because I thought it was pretty interesting. So I actually went to as far as stock chart goes for these daily charts, and I want to show you from 1990 on the SPX, right? So if you look at it, see how it had this like 5-year run of this angle. This angle is pretty steep, and then 2003 to 2008, another steep angle, and then like 5 years here, right? So, you know, I saw that. It was interesting. I know people talk about it, but I don't know if you guys saw it. So basically 5 years, and then 2000 happened, and then we had 5-year run, and then 2008 happened, and now we just are currently in another 5-year run. As you can see, it doesn't really just go down, right? So every time it hits the peak, it kind of stagnates for a while. In 2000, looks like it stagnated until basically September. So all while NASDAQ was crashing, it was still actually staying pretty steady, right? So all the high beta stocks, like Pets.com, was just getting annihilated. If you look at the SPX, it was actually staying very steady because people are probably pouring money into SPX, pulling out of NASDAQ, and only in the fall did it actually hit the SPX in general. In 2008, similar situation, a little bit different. Basically, you know, I think people who were worried about the housing sector starting to get out here, and I remember a lot of talk about how maybe this was a good buying opportunity right here, down here, but then people just sold off. But as you can see, it doesn't just sell off; it kind of consolidates. And right now, I don't know. Right now, I'm like one of those guys. I like hanging out with the pattern, but I just got spooked. I'm still long, just so you guys know. It's not like I'm short. I'm still long. I just had to take off a lot of my longs just because, you know, I got spooked reading the Ukrainian news. So I think it's going to get worse than better. So if there's uncertainty, I just don't feel like risking a lot on the upside. So I had to get out. My timing was pretty poor because I got out here, and as you can see, like the market's rebounded. So, but I think there's still a lot of risk right now. just in the short term until the Ukrainian crisis resolves itself. But other than that, I'll be back in about 15-20 minutes. Hope your trading goes well. Talk to you guys a little later.